Hi, everybody. Welcome back to the show Women of Wine Country. I am Terry Wells Brown, your author of the series Women of Wine Country, with the third book out, Beauty and Betrayal. So get that off of Amazon. I am so honored today to have a very well-respected lender in our area here, John King with Summit Funding. And we're going to talk to him about all the questions that we have because, you know, we've all got questions. So welcome, John. Thank you so much for joining us.
Well, thank you for having me, Terry. I apologize that I'm not a woman of wine country. Hopefully a man of wine country will do for you today.
Yeah, we like our men of wine country
Okay,
too.
got it. Just making sure.
Somebody's got to feed us the grapes, right?
Right.
So the reason I asked you to come on the show, and I do really appreciate your quick response, is so many of us homeowners have a lot of questions about the forbearance, and there's a lot of rumors going around, and I wanted to get right to a professional who could help us out with all of the things. So do you just want to kind of jump in on what you know?
Oh my gosh, there's so much. First of all, thank you for having me here. I've been in the industry for 19 years. Through the last housing crash, I worked for a major bank, and I helped guide a lot of my clients through how they dealt with challenges and how they dealt with the bank. And I think we're dealing with a whole different set of circumstances today than what we dealt with 12 years ago. And a lot of the rumors that you talked about are really in part because we've got people that are thinking back to how things worked in 2007, 2008, 2009. And the problem is totally different today, and the solution that the banks are employing is totally different today. So I think that's a big piece of what we need to talk about.
Yeah, I agree.
So what I'll start with is the number one thing that's been talked about in the media is forbearance. And I know I'm still having a hard time spelling the word, but you know, at least I understand how it works and what it does. So the biggest misunderstanding is what truly is a forbearance. And the word in and of itself simply means postponement of the payment. It isn't forgiveness. And so Congress came out and they said, look, we know that a lot of people are underemployed or unemployed because of this crisis we're dealing with COVID. And for that reason, we need to figure out a way to help out homeowners and streamline the process. And so they've said anybody can pick up the phone and call their servicer and request a forbearance, meaning you're not going to have to make the payments and you're not going to be reported late. So in general, it sounds great. And it would mean you don't have to make the payment for anywhere from 3 months to 12 months, and you're not going to have any late payments showing up on your credit report. And that's really the extent of what our government officials have shared is that's all you have to worry about. Just call them and don't make your payment. The challenge comes in a couple of ways. First of all, how do you make up the payment? There are no rules. There is no specific guidance set by the government other than it's up to the servicer and the investor. And that's a really important thing that most people don't understand is there's a big difference between the term servicer and the term investor.
So a servicer is your bank, your mortgage company, correct?
The person whose name you write the check to or that you do the deposit to, okay? The investor is Wall Street. Mortgages are typically bought by financial institutions on Wall Street, and so the servicer is just a go-between. They don't make the final decision, but they have a lot on the line, and I'll cover a little bit of that as we talk this morning. But the bottom line is the servicer and the investor will determine when do you pay it back. And in general, there's 3 different ways that I'm hearing they're having people pay it back. The worst case scenario is you owe all of the payments back as soon as the forbearance is over. So if you think about that for a minute, what you got is you've got somebody that couldn't make their payment in April. And so they're going to skip April, May, and June. But now July 1st, they're going to owe all 3 months they skipped plus the July payments. Now that isn't going to be the answer in all the cases. Like I said, there's essentially 3 ways they'll handle it. But for the people who their bank is handling it that way, if you've been out of work for a few months, even if you're back to work, are you going to be in a position to make 4 months of payments? That's what worries me a lot. So the second scenario is they take those 3 months and they put it at the end of the mortgage. And they say, hey, instead of being done paying for your house in June of 2045, you'll be done paying in September of 2,045. You just have to make 3 extra payments at the end. And the third scenario I've heard is where they say, okay, we're going to take those 3 payments or those 12 payments or whatever you're skipping, and we're going to divide them out over a period of time. Maybe that period of time is a year. Maybe that period of time is the remaining X amount of years you have left on your mortgage. The problem is we just don't know what your servicer is going to do until you talk to them directly.
So your advice is you need to call your servicer and find out what your options are.
Absolutely, you need to call your servicer. The problem is your servicer won't answer the phone.
Yeah.
And they won't answer the phone because you've got what we really expect to be around 1 out of every 4 homeowners is likely to ask for a forbearance. And your servicer wasn't designed to answer the phone in a 1-week time frame from 25% of their clients. And so they're overwhelmed. They've got websites that you can click a button to apply. They've got phone trees that you can press 7 to apply for a forbearance, and then they say, great, you've been approved. But the problem is
you don't know what that means.
You don't know what that means. And so it's a delicate set of circumstances, and we're walking a really, really fine line between getting a short-term solution for people who absolutely need it, but having a long-term challenge that we don't know how to solve.
Yeah.
That's okay.
Sorry. One of the perils of working from home and having 4-legged children.
I think I have 2-legged children, and one of them just tried to walk into the room a minute ago, so I totally understand. So the reality is, if you have to have a forbearance, if you are out of work, if you don't have funds to make the payment, by all means, get the forbearance. And if you can't reach your servicer, do it anyway, meaning request the forbearance, because your alternative is you miss a mortgage payment and it's counted as a late payment, and clearly punting the football 3 months down the road and hoping for a better solution over the next 3 months is a much better option than not making your payments.
Right.
Okay.
So if you can't make your payment anyway, you have nothing to lose. Go ahead and sign up for the forbearance.
Go ahead and sign up.
And then the next step is, do you go and try to apply for a hardship then? I mean, what's the next step after that?
Well, the next step really depends on your circumstances. So I'll back up 1 step and say, if you're questioning whether you need a forbearance or not, if you have the money and savings to make the payments, you need to make the payment. If you're getting income, like, if you're a business owner, you've got many options through SBA to get access to cash. Use that money to help make your mortgage payment, because there's no free ride and there's no free lunch. You're going to pay it back at some point in time. So that's the other caution about forbearance, is don't do it unless it's your absolute only choice. Once you do it, try and get a hold of your servicer a month from now, because you'll have a 3-month forbearance. Most people aren't going to think about it again until 3 months from now. They can grant you additional time up to 12 months, but you're going to be experiencing the same high level of call volume 3 months from now, when everybody's freaking out that, hey, my mortgage payment's now due and I owe 4 months. What am I to do? So in that case, you want to start talking about the word modification. And you want to start talking to your bank and saying, hey, can we look at modifying my mortgage so that I don't have this huge payment of 3 or 6 or 9 or 12 months due when this forbearance is over? And so that's really where, Terry, the hardship part comes in. And each individual lender, and it also depends on what type of loan you did and who the investor is, have different thresholds on what they'll do to modify you and what proof you have to have that you need to be modified.
Got you. So again, it comes back to the individual mortgage company that you're with.
It comes back to the individual mortgage company that you're with. And there's a whole nother challenge in the marketplace right now that nobody thoroughly understands. And I'm hopeful we can take a minute and kind of share what's going on with the servicing world and how the modification, or excuse me, the forbearance process is actually putting the mortgage industry in serious danger of collapse. And I don't say that to over dramatize it. So once we finish talking about the consumer side of it, I want to share a little bit about what's going on, because
Absolutely.
I would not be surprised if in the next 90 days we have some large mortgage servicers go out of business, And that's going to be a hard thing for those people that are working with those servicers as well.
So, so let's stay on the consumer side and then transition over into the business side, because honestly, what happens in the business side really is the consumer side as well, right?
Yes, 100%.
Because if there's nothing to consume, right?
That's right.
So for anybody for anybody who's been laid off or has issues with making their mortgage payments, they should absolutely contact their bank. It's probably a good idea anyway to contact your bank, and if you can get through, and then find out what your bank is offering. Now, is this what about income property? So like, let's say you have rental property.
Again, it's a case-by-case situation. The reality is the government mandate said nothing about what type of property that you have to be. And so it can be on investment property, it can be on primary residences. I saw nothing in what I read that said it has to be a primary home. You've got, again, the same issues, though. You're gonna have to make up the payment at some point in time. And as the landlord, are you going to be able to make up those payments from your tenants? Are you going to be able to force your tenant 3 months from now to make 4 months of rent? Because somehow, as a landlord, you're going to have to come up with that money anyway.
Yeah, because regardless of what your renter does, it's on you to make the mortgage payment.
100% correct.
So, because you've probably got quite a few renters that are just not going to be able to make their payments. I mean, if somebody's living check to check to check, which a lot of people do, and then all of a sudden their checks are taken away, you know, what are they going to do?
No, I think it's a problem across all levels, whether you are a homeowner or not, whether you're a renter or not. It's impacting everybody at every stage, and we just have to be aware of the fact that forbearance isn't a long-term solution. And that's I said that twice already, but I want to repeat it again, because too many people are thinking, okay, I'll get a forbearance and I'll get some form of forgiveness or postponement till the end of the loan, and you're gonna be shocked at how many banks are not doing that. And so just know that this is not a long-term solution, it's a Band-Aid, and when you're bleeding, a Band-Aid is better than nothing.
Well, I think this is a great time to segue into then the business end of it, because you just transitioned us to there's a lot of banks that are not going to be doing the end of the loan, which I think a lot of people hope for, that they could just move it to the end of the loan, then we don't have to worry about it for 20 years, right?
Yeah. So,
but that's going to kill our mortgage industry, is what you're indicating.
It's creating, so first of all, the mortgage industry is not going away. You know, think back to 2008 when you had banks failing. The banking industry didn't go away. Okay, the mortgage industry is not going away, but I believe there's going to be some significant challenges, and there's going to be some companies that are going to pay the ultimate price. And so here's the simplest way I can put it. When we were just having the conversation about being a landlord and the fact that, hey, if your tenant doesn't pay you, you're still responsible as a landlord to pay the mortgage. The same situation holds true with a mortgage servicer. The mortgage servicer is responsible for paying the investor, no matter if they got the payment from the homeowner or not. And so we're dealing with that exact problem that landlords are thinking, well, gosh, I could get a forbearance, but I'm going to owe the money later. The banks can't get a forbearance right now. A mortgage bank, and the biggest challenge is the fact that over the last 12 years, there's been 2 different types of mortgage banks that have come out. There's the depository banks. We all know the names. It's the companies that you have your checking and savings account with. And then you have the mortgage bank. Summit Funding, my company, is an example of a mortgage bank. We don't have a deposit base. We don't do anything but mortgages. And we've taken a significant chunk of market share over the last 12 years. So a majority of homeowners have done their mortgage through a mortgage bank instead of through a depository bank. Now, John, why does that matter? It matters because the depository bank has deposits they can use to help cover the monthly payments they have to make to the investor when we're not receiving the payment every month from the homeowner. A mortgage bank doesn't. A mortgage bank gets a very small amount of profit every single month. So I was given some numbers, I don't have them in front of me, but I'll go off the top of my head. The mortgage industry, of 25% of homeowners go into forbearance for 6 months. That's going to cost the mortgage industry $70 billion in payments that we did not receive, that we're obligated to write checks to pay the investor. We have to pay your homeowner's insurance still. We have to pay your property taxes still. We have to pay your mortgage insurance still. Everything you pay us, we have to turn around and pay all of those other parties. So $70 billion is what it would cost in 6 months. The mortgage industry only receives in income $10 billion a year in revenue, because we only get a little bit of that payment. So think about it. In 6 months, a mortgage bank will have to pay out 7 times what they generate in revenue in a year. That's impossible. That's not even profit, gang.
Yeah.
It's impossible to function. So we've got good news and bad news, and all of this is political. And so, Terry, I think you would agree there's no intention to be political here, and I don't want to go there, but it's a fact of kind of what we're dealing with. When the CARES Act was passed a week and a half ago, Congress and the president had added an option for the Federal Reserve to give money to mortgage servicers that need liquidity to write those checks. And so it exists. They put it into law that says the Treasury and the Federal Reserve can create a lending facility, create the ability for mortgage banks to go borrow money when they need to make these payments when the homeowners aren't paying them. The Federal Reserve and the Treasury are refusing to set up that lending ability. And of the people that I've talked to, and I won't say I've talked to, that I've listened to in my industry and in government-related roles, they've basically made it clear they're waiting until a couple of mortgage banks fail, because they don't want to be seen as bailing out the mortgage industry like the government was seen as bailing out the banking industry back in 2008. And so
they're willing to let a couple of major banks fail, and all of those, because that all trickles down.
It does.
Just so that they don't look a certain way.
Because they don't want to look like, I mean, look, again, I don't mean to be political, and I'm not being political because I won't give any side here, but let's think back to February when Trump said, hey, we're going to shut down flights or minimize flights to China. And some people said, oh my gosh, how dare you do that? This isn't that big of a deal. Well, now some people might be thinking, well, why didn't he do more back in February? Why didn't he shut down more flights? Why didn't he close the borders completely? Because everybody would have freaked out if he did more back in February, because they didn't understand the nature of the problem until the problem came home to roost.
Right.
That's what we're dealing with right now, is the general population doesn't understand the nature of the problem. They think that the government just has the bank has the government in their back pocket, and they just want their handout from the government. And so the government doesn't want to be seen as doing that. That's my opinion, but I've heard that shared by a lot of people, because the law is there to solve the problem and they're refusing to do it. And I think they need to see some banks fail. And I'll explain in a minute what that really means to the consumer. It's not as bad as what you might fear, but it will create major challenges for you. But very simply, Terry, that's what we're dealing with.
Wow, that's incredible. So
yeah.
I just saw come across my feed right before we logged on that JP Morgan Chase is predicting a serious recession, even to the likes of what we saw in 2009 and 8.
Yeah, I think that there's a good chance of that happening. I think that, again, I don't know that we want to get into the economic side of things right now, but I firmly agree. And I think the guys at JP Morgan Chase are way smarter than I am. So if they're saying so, then I think there's a good chance that that's what's happening.
Well, I think that there's, I lived through the downturn as well. And it was quite brutal as a contractor, as you can imagine, that anything that had to do with the housing industry was just wiped out. Yeah. I think that we are on the precipice of another possible recession, forced recession, really. Right. The difference is that a lot of us lived through it, and we don't want to do it again. No. And we're at the age now where we have a little more power to move things forward, and the fact that we did live through it and everybody has been cooped up, my prayer is that as soon as the government lifts this, that everybody will go out and use their money to keep the economy going. I think a lot of us understand that it could go either way, and it's really up to us.
It is. It is. I think a big difference is 2008, housing caused the crash. And this time housing has nothing to do with the crash. It's just a victim of the crash.
Right.
And I think that's going to help us recover faster. But I'll tell you a couple of things. First of all, the mortgage world is very, very fearful of lower credit score, low down payments, high debt ratio loans. I have never seen as big of a change in guidelines in a 30-day time frame in my 19 years as I have over the last 30 days. So
yeah,
it's harder to get a mortgage today. And it's the byproduct of, hey, if we give you a mortgage, we've literally had clients who we've closed a loan on and a week later have called up and said, okay, now how do I get a forbearance so I don't make the first 3 payments on my mortgage? And,
really?
and very, very true. And the challenge is that it's I don't want to say this the wrong way. Some people think they're entitled to, hey, I can skip 3 months of a payment because I'm impacted by this. Well, but you told me a week ago when we closed your mortgage that you can afford the payment. And now you're trying to tell me you can't afford the payment. And it's that moral dilemma that's making banks question whether they want to lend at all, let alone lend to people that are on the fringe of qualification.
Well, I mean, quite frankly, the people who lending to people who were on the fringe of qualification is the reason that we had the first downturn.
Yes, but no, because the truth is, I think it was more about the fact that anybody that we did loans to, we didn't prove, we had no clue if they had qualifications.
Right, because there was no
didn't
dog
look.
loan kind of
Exactly.
thing. Yeah.
And on top of that, their payment wasn't a fixed rate and a fixed monthly payment. And today, 90% of the homeowners have fixed monthly payments. And so you had to refinance in 2009 because your payment was about to skyrocket and you couldn't. Today, that's not going to be the case. So it'll be very, very different.
So
Terry,
right now what's happening is the mortgage companies are tightening up their parameters in order to loan money just to be safe.
Yes.
That's going to hurt new time homeowners and mortgage brokers like yourself because it's less business, but it'll be it'll be a safer thing for the mortgage companies, the investors anyway, right?
Yes, and at this point, we're focused on survival of the industry, and
right.
I mean, it definitely has, and there's way more to this than what I'm getting into right now, but the bottom line is there's a bunch of challenges going on in the industry right now that is making it harder to do mortgages. I'll give you one more simple example. Jumbo loans over $510,000 in the Central Valley are almost extinct. Literally, as of 3 weeks ago, I had 11 different banks that I could sell those loans to. Today, I have one. And that one bank has significantly curtailed their criteria. One of the largest mortgage banks in the country, and a depository bank, I won't name their name, but they just said, we're not going to refinance anybody on a jumbo loan unless you have $250,000 of deposits with our bank. It's getting that tight right now. And so, again, the bottom line is the market is tightening. One thing I want to make sure we get back to real quick is what happens if your servicer fails? Because I kind of alluded to that a few minutes ago about, hey, some servicers are going to go under, and I don't want people to worry too much. So do you want to talk about that right now?
Yes, please. Okay. Yes.
So just like if your bank were to fail, which happened in 2008, where banks fail, the federal government steps in and they find a different bank to take your deposits. Okay, they transfer the money over there, you don't lose your money. The same thing with your mortgage. First of all, it doesn't mean that you don't owe on your mortgage anymore. Like there's some people that ask, John, does that mean I just won the mortgage lottery and I don't have to pay it anymore? No mortgage lottery for you. But what it does mean is it's going to be harder to figure out who your servicer is in the meantime if you're asking for a forbearance or you're asking for a modification. The debt servicing is being transferred to a different company and they're taking on a whole bunch of new clients that they have to even get onboarded onto their computer, their system, before they can even figure out, well, your old bank said you could modify or you could have a forbearance for 6 months, but the paperwork wasn't finished and we think you owe it in 3 months. And there's going to be a lot of that going on. There's going to be a lot of miscommunication and you're going to have to start over if you were in the process of a modification or forbearance process. It's going to be ugly. Again, it won't be anything that can't be fixed, but in the short term, right now you can't get your bank to answer the phone. If your bank fails, then it might take a week or 2 or a month to figure out who your payment even goes to. That's the kind of thing that is going to impact the consumers directly.
Yeah, I remember last the downturn in 2009. I was helping a girlfriend with her house do a loan modification, and we literally had to send the same paperwork 5 different times to 5 different people.
Yes.
And she finally got so frustrated she did a short sale and got out of it.
Well, and that's why this time around, Congress said, we're not going to require any proof of hardship to apply for a forbearance. You simply have to tell your bank that you've been impacted. It's an attestation. I attest to the fact that I've been impacted by the economy and the coronavirus shutdown, and I can't afford to make my mortgage payment, and the magic wand is waved and you don't have to pay it for a period of time. But that creates a moral dilemma for those that can pay, but maybe they're worried. I mean, maybe, hey, I've got enough money in savings, but I don't want to spend it all on my mortgage, because what if I need to go buy toilet paper? Because I think the price of toilet paper is going up a lot when it finally comes back in stock. So, I get that thought process, but it creates that moral dilemma that says, well, if you don't have to prove a hardship, how many people are going to take advantage of this that don't have the hardship?
Yeah.
And especially not understanding that it's not forgiveness, they're going to put themselves into a deeper hole.
Right. I agree with that. I think that's one of the reasons why it was so important to get somebody on to talk about this so that people understand what they're looking at. Because I had a lot, I'm a homeowner. I've owned my own home for 30 years, and a lot of my friends have as well. And so, the rumor mill starts and they're like, oh, just put your mortgage towards the end of the, I'm like, that sounds too good to be true. So yeah. I started doing a little research, and then I got a few different versions of it. And I thought, okay, it's time to pull some professionals in to tell us what's really going on.
Got it. Well, I appreciate the opportunity to be that professional today and to share with you what I know. Here's the only thing I know for sure. We really have no idea how this is going to play out.
Yeah, I agree.
We don't know. Now, go ahead.
Now, how does this impact the property levels, the property
values?
Yeah, values. Thank you.
So right now, I think we're going to see a current pullback in property values simply because people who are selling their home, they have to sell. Terry, do you want somebody walking through your house right now to buy your home, knowing that you've got, who knows what they're infected with? I mean, it's the unfortunate reality of social distancing. And so the transactions that do happen while we're in quarantine are the ones that had to happen because the seller had a need. And so when you have a need, you're willing to accept a lower price. And I see the buyers that are willing to buy, they want a better deal. They say, hey, you don't have many options, seller, to find a buyer that's interested in buying in this market. The unknown is what's going to happen when we release people. When people are allowed to go back out and into the community, that the social distancing and quarantining is over, are we going to see a huge rebound in home buying? There's a lot of people making an argument that yes, we will. I think the simplest reason is because we got tired of being quarantined in a tiny home, right? So there's a lot of people who live in an apartment that says, oh my gosh, I can't live here anymore. This is way too small. And so I do think we're going to see a lot of pent-up demand. How that's going to play out, though, I don't know, because we don't know where mortgage guidelines are going to be. We don't know where interest rates are going to be, although I fully expect them to stay really low through the election, but who knows? I mean, the only known is that we don't know.
Right. I think too, because we did live through it, and it's not like 3 generations back from the last recession. My hope is that mortgage companies, we learned, and the mortgage companies learned, that foreclosing on, hundreds of thousands of homes did not help them at all. So my feeling is that a lot of mortgage companies will basically exhaust all efforts to keep homeowners in homes, but we need homeowners to be understanding and reasonable about what it is they're asking the mortgage companies to do, and understand that they're one among millions that are making the same request.
Exactly. And I do think there'll be more and more creative solutions depending upon how deep this problem becomes. And so for those that have no option but to do a forbearance, and you're worried about, hey, my bank says in 4 months I'm going to owe all 4 payments, you're not the only one that's going to owe 4 payments to the bank in 4 months. And the bank knows everybody's not going to be able to pay it. And so will there be something better at that time? I wholly expect so. But if you can afford to make your payment today, do you want to take that chance?
Well, exactly. Do you want to put yourself in the same boat with 100,000 other people? You don't want to be
Exactly.
one of 100,000.
Exactly correct. Yeah. And what damage is then happening to your ability to purchase a home or refinance down the road? And this is a big unknown because the rules are clear. They can't report on your credit report. It can't impact your credit score that you were in forbearance. But that doesn't mean it wouldn't show up some other way. And there's nothing prohibiting mortgage banks a year from now from saying, hey, if anybody took a forbearance in 2020, we won't lend to them for 3 years after that. I'm not saying that's the case, but there's nothing that prohibits that from being the case 3 years from now when mortgage banks, or a year from now, when mortgage banks and the powers that set the rules say, you know, those people clearly are fragile in their employment and their ability to save and to keep money in the bank for a rainy day. And we're not willing to take a risk on those people until 3 years after that problem happened. Again, that's not a rule and that's not necessarily a prediction, but it's certainly a concern of an unintended consequence that could come out of this tragic situation we're dealing with.
Well, and it's not an unreasonable consequence either. I mean, if I'm gonna make a loan to somebody, I'm gonna want to know that they'll be able to pay me back regardless, and that they're gonna be responsible. Even just like when I rent out one of my rentals, I want to know that they're gonna be able to pay the rent.
That's
so
right.
It's not an unreasonable consequence.
I fully
Not
agree.
that they're gonna do it, like you said, but it's not an unreasonable thing. So people need to pay attention to what they're doing. I mean, the forbearance is there for people who legitimately are going to have to rely on it.
For sure, for sure. But the more people that do it, especially the ones that don't need it, you're creating a bigger drain on the mortgage industry that could create deeper challenges that we all don't want to deal with. And so it's got to be somewhat the tribe mentality that, hey, the ones that need it, let's leave it for them. Those of us that can find another way through, let's not take advantage just because it's there.
Yeah. And I think the biggest thing that we can leave with everybody today is that if you can pay your mortgage, pay it. And if you can't pay your mortgage, there's going to be some repercussions. It's not going to just magically go away. You will have to pay that mortgage at some point.
That's correct. That's correct.
Yeah. Okay, well, thank you. Is there anything, how people have questions, how can they get a hold of you?
So you can email me or you can call me. So email is john@johnloanking.com. You can also call me. It's 209-910-4019. I do a lot of videos providing informational content. So you can also check out my YouTube channel, and it's YouTube/John Loan King.
Awesome. Great. Well, thank you very much. We do appreciate your professionalism and the information that you've shared with us today.
Terry, I appreciate you having me on, and I hope you have an amazing day.
You too. Thank you so much.
You're welcome.
And thank you, everybody, for joining the Women of Wine Country. If you have any questions, you can certainly get a hold of John, leave a comment here, and we'll make sure he gets your answers to you. Thank you. Bye-bye.